Welcome back to my diary. If you're new here, in this space, I talk about forex related stuff, the mistake I've made, and most important, the lesson that I keep making every day so that I can share with you. If you find this video very interesting, kindly hit that subscribe button, comment, tell me what you think about the video, and let's grow together. In today's video, I want us to look at the three things before you enter any market. Any day you open the chart, if you are a beginner, if you are advanced, anybody, you are welcome to watch this video and it will help you along the way. Now, when you open the chart, there are three things you are supposed to look. If you don't have a strategy, if you don't have a setup, if you don't know how to analyze the market, always look for these three things and they will really help you along the way. And by the way, if you have not subscribed, ensure you have already subscribed. You are almost heading to 1,000 subscribers, and that way you can help me reach more people. Number one, as you open any chart, you have to do something we call a top-down analysis. And in this case, I'm not talking to a scalper. Even if you are a scalper, yes, you have to do your top-down analysis. But in this case, we are talking more about intraday trading or a person who is more interested on swing trading, where you're not that much glued to the chart. You can enter the trade now, you exit later. Maybe you are a busy person, so this is the best way for you to analyze the chart. And the first thing I'm saying, you are supposed to do a top down analysis. Any day you open the chart, remember you are supposed to do a top down analysis. And when you're analyzing the market, you are supposed to analyze the market using the higher time frame. You don't even analyze the market during the week. You are supposed to look at the market during the weekend when the market is not moving. Okay, number one, just do a top down analysis. Top down, let me be writing. You can be writing also because it will help you along the way. Top down analysis. And in this case, when we are doing our top down analysis, we want to start from the weekly. We want to know what is the weekly market doing. Then, of course, you have to go to the daily time frame and the 4-hour time frame to know the direction of that market. Why am I saying you have to use this for a time frame? It is because we want to know what is happening. For example, if we have the daily time frame and the weekly time frame is saying we buy, then at least we have to narrow down to go to the daily time frame to know what is the daily time frame doing. Is the daily time frame telling us the same thing that the weekly time frame is doing? Only then we will know where we are heading to. Okay, so for example, if we have the weekly time frame, it is telling us to buy. Let me even just write here, weekly time frame is saying you should be buying the market. So you don't have to buy the market. Remember, the weekly time frame takes a whole 4 weeks for the week to create a structure. So you see, the weekly time frame takes quite a longer period of time, and we cannot wait for a whole week for us to enter the market. That is why we have to use what? We have to use the daily time frame. And for example, if the daily time frame, it tells you are supposed to be selling the market. Are the very basic things that you are supposed to be knowing. Anytime you enter the market, these are the basic. You are supposed to know these things. You have to now narrow down to the 4 hour. Why am I saying that way? It is because if you have the weekly time frame telling you to buy and the daily time frame is telling you to sell, now which one will you follow? Because at the end of the day, we are using money. Okay, this is real money and this is a business. You have to decide, you have to know the location, all those things. So you have to have an idea of what is happening. That is where again you have to narrow down to the 4 hour so that you don't have to be 50-50. Okay, so when you go to 4 and for example, in the 4 is telling you should be selling the market. What does it mean? It's for example, the 4 is saying sell. Now, which one will you follow? By this time now, at least you have two. You have these two that they are speaking the same language, and they're telling you it is time for you to enter the market, and you can sell the market because the time frame are saying it is good for you to sell the market as of this time compared to buying the market. You see how you are starting from the higher time frame, you are analyzing that market until you reach to a conclusion. Now, when you have again this two time frame telling you it is time to sell, you don't have to buy the market. It is telling you you have to sell the market, but that is not all that is required in the market. Now, already you know, if I have three time frame, two telling me to sell, then I have to sell the market. That is how at least you come from a point of not knowing. At least now you have an understanding of how I will enter the market, but you are not told to enter the market. You are just given an idea. Oh, the market is selling as of this moment, and I will not consider buying. What I have to consider, I have to consider selling the market. But that is not all. Remember, I keep on saying now to elaborate this even further. For example, the weekly time frame. If the market was supposed to be buying, this is how you find the market reacting. The market, of course, will never go on a straight line. This is how maybe the market will be looking at. Let me use a black line so that it can be quite and make this line a bit thick. For example, this is weekly. The market is creating high highs and high low. By now, you already know how the structure is already created. When we come to the daily time frame, it is the same thing. Now we are zooming in. Let me use a simple line here. In the daily time frame, this is how our chart will look like. You see, it is the same thing. Only that daily we have a lot of structure. Let me start again from here. It is the same thing. Only on the weekly time frame, we say it takes a lot of time for the structure to be created. On the daily, you will find the same thing. But now on the daily, we have quite a lot of structure happening before even we can go to the higher, to the lower, to the 4 hour. This is the structure. I want to do it properly, but I don't know why my drawing is not coming the way I want it to be, because it should replicate the it doesn't want to come the way I want it to be. But anyway, at least you have an idea of what I'm saying. Let me try that time, because we don't give up. Let me even just start from here. This is how the market should look like on the daily time frame, because it is the same thing, only that on the weekly it takes a lot of time. Remember, this thing is just from here. You see, from here, this is the same thing. I've already replicated it, and now when you go to the 4 hour, it is still the same thing, but now you'll find a lot of details on the lower time frame. It is the same thing, but now you'll find a lot of details, which is still okay, but at least you have an idea. The more you zoom in, the more you have a lot of curve, a lot of structure, but at the end of the day, they are still speaking the same language. Now, from there, you have to go to point number 2, because you have already known how to do a top-down analysis. And for the next point, now you have to understand where is my point of interest. And in this case, you must know there are so many types of point of interest. Our point of interest, this should be our number 2. Let me write number 2 for my chart to be clean. Our point of interest. In this case, I use a simple concept, and I keep on saying this time and time again. You have to use something we call support and resistance. It is the easiest. Support and resistance. It is one of the easiest things that a beginner can understand. And remember, even those people who always use, there are so many people who use different things, but at the end of the day, it is the same thing. There are people who always say, no, I don't use support and resistance. What I'll be using something we call supply and demand. There are those people who use that concept of supply and demand. It is the same thing. Don't be fooled. Supply and demand. There are those people who uses that one. There are others who use the order blocks. There are others who use something we call the fair value gap. Fair value value gap. There are others who use what you call liquidity. All these things, they all speak the same language, only that it is like a book. Let me just say, like a geography book, like a big book, and it has so many pages, it has so many concepts inside the subtopic. There are so many, but at the end of the day they speak the same language. So choose what you feel like you're comfortable and stick with that thing. At the end of the day, all these things, they speak the same language. They are our point of interest. Okay, so already, after you have already understood now that you have to have a point of interest, and in this case, a point of interest, it is an area. It is not a specific point. It is an area because the market, it keeps moving, but at one point you realize there's a time the market, it will come to a certain level. Let me use a simple diagram here. Maybe we have this kind of a market, and you can find the market is reacting toward a certain area. So at least you have an idea of how the market is behaving whenever the market react toward a certain area. That is why we are saying all these things. Whenever you hear somebody telling you, I'm looking for an order block. I want to find a fair value gap. I want to find a supply and demand. They speak the same language. At one point, you realize the market will come and tap around this area. You see, the market will come and tap around this area, and it will react. And the moment you find the market tapping around a certain area and the market is reacting, the market is bouncing around that area, then we have question, why is our market behaving a certain way around that area? And it simply means, again, because we use technical analysis, it clearly tells us we are supposed to use the past data to enter future. And in this case, if the market at one point in the past, it ever came to this point, after a long period of time, again it came to this point, it is the same thing, the same thing that happened during the past. We are using that thing to enter the future. We are using that gate or the window to enter the future. Okay, so don't be confused. Anytime you hear people saying, I'm using support and resistance, I'm using as a supply and demand, I'm using order blocks, all those things, they speak the same language. And at the end of the day, we are all at the point of we want just to enter the market, we want to zoom in, we want to have all the confirmation for us to know when it is time to enter the market and when it is time to exit the market. So by now, at least now you have our point of interest. And remember, for a strong point of interest, the interest should come from the higher time frame. In all the time frame, you will always see something called support and resistance, supply and demand, order blocks, fair value gap, liquidity, all the time frame. You will find this thing happening time and time again. But in our case, because we are saying we are not scalper, we want to see our point of interest happening from the higher time frame, because the higher the time frame, the more stronger it is respected. But even if you go to the lower time frame, it doesn't mean it will not be respected. But imagine in this case, we have a 15-minute time frame and let's say a 4-hour time frame. And the 4-hour time frame, the market is bullish. The market is bullish. When I say it is bullish, of course, you know the market is creating high highs and high lows. So when you come to the 15 minutes, you find that the market is doing what? The market is retracing. The market is maybe heading toward the downside. Now, which one will you follow? Which one do you think is stronger than the other? Of course, it is the 4-hour, because the 4-hour takes a lot of time to be created compared to the 15 minutes. And even if you go to the 15 minutes, after every 15 minutes, a candle is already printed. But now when you go to 4, it takes 4 hours for a whole candle to be presented or to be printed. So at least you have to know higher time frame will always be respected more compared on the lower time frame. Okay, that is how you know, oh, this is a very strong point of interest. And even if again you go to the weekly time frame, it is the same thing. Weekly time frame, again I've said, it takes a long period of time to be created compared to the daily time frame. So the structure of the weekly will always speak volume, but you have to be patient. On this case, again, you cannot wait for the weekly time frame until the day the weekly time frame shall be created or shall be printed for you to enter the market. That is why we have this other time frame. And by the time now you have already understood, I know where the market is heading. The market is maybe is telling me to sell and have my point of interest. That is only then you now have to go to the entry. Okay, that is only then now you can say now I want to go to entry, because I already know where the market is heading to. And now when you come to entry, I have a whole video by there. If you feel like you have not understood, I have a whole video of top down analysis. And the last thing we have the entry. Entry should always be the last thing. Entry should always be the last thing for you to consider. Don't start with entry, start with analyzing the market, knowing what is happening in the market. By this time around, of course, you have already known, you don't have news today, and now you want to enter the market. Now when you want to enter the market, you want to see something we call simple confluence. Okay, we want to see confluence that are telling us you can enter the market. It is okay to enter this market as of this moment. And what do I want to see for me to enter the market? I want to see patterns. They are the easiest. There are so many patterns in the market. It all depends which one do you love. And I love a simple one. For example, if I want to sell the market, we are saying about selling the market. You want to see patterns like the head and shoulder. They are the easiest because they happen time and time again. Head, shoulder, the easiest pattern you can ever see in the market. We want to see something like a double top, double a double top, or the last thing we want to see a ranging market, ranging arranging arranging channel. That is the easiest way you can start saying, oh, it is now time to enter the market. And after you have already seen this thing, the opposite will be inverted head and shoulder, a double bottom on arranging channel. After you have already seen this thing, now if you want to enter the market, and in this case you are supposed to be selling the market, you are supposed to see a red engulfing candle, red engulfing candle. That is one of the easiest candle that you can master in the chart. A red engulfing candle or a rejection candle. The easiest a rejection candle, one of the easiest candles that you can see. Or you can see a simple pattern like what, an evening star or a morning star, and that is the only way for you to know that you have already analyzed the market. So I know by now you have an idea of what I'm talking about, and you're in a position for you to enter the market. So thank you so much for watching today's video. I hope you've understood. I hope you've learned something and you can practice from today onward. So until next time, bye bye.